Let's get more on the markets. We're joined by Art Hogan, Chief Market Strategist at B. Riley Wealth Management. Art, great to see you. Thanks very much. The good old NASDAQ 100 getting to a record high yesterday. Investors still believers in the Mag 7.
Yeah, certainly are, and that certainly was not the case for the whole first quarter of this year, where that group, the entire group, the technology and communication services and consumer discretionary, were really seen as a source of funds as investors got more defensive. Now that we enter the second quarter, we're feeling a bit more comfortable with that risk proposition, and we've certainly seen that over the course of the last 6 weeks. It's been a return to the mega cap technology stocks, but also we've seen some of those defensive sectors like the consumer staples give back some of those first quarter gains. So it's been a very healthy rotation. Investors wanted to be very defensive in the beginning of the year. Now they're feeling more comfortable about things like trade and tariffs, Middle East tensions, and the potential to pass a tax cut extension through the Senate and get it on the president's desk. So it feels as though a lot of that uncertainty we had in the month of April is starting to dissipate as we're working our way through June.
Jay Powell set for a second day of testimony before Congress. Yesterday, he indicated the Fed is still in no hurry to cut interest rates.
Yeah, I think that the nuance in yesterday's conversation with the House Finance Committee versus his press conference post their meeting last week was that he was open to some of the members that have spoken up about July being the appropriate time to cut rates. Now, they just put out a dot plot, and there's still 2 rate cuts penciled in. It's a very fine majority that gets the median to 2 cuts this year, and that has never been a very predictive way to look at monetary policy. But I would certainly say, when asked directly what you think about some of the folks that are talking about July being a potential, he talked about what would need to happen to make that a reality, and there may well be enough data come July. Right now, the Fed funds futures only have about a 25% chance of that being the case. But when you go out to the September meeting, it looks more like a 75 or 80% chance. So we're probably at the same place in monetary policy. I think the Fed's deliberately taking their time to see if the new tariffs are going to start to show up in some of the inflation numbers, and they'll have a couple of readings on inflation by the time they meet again in September.
Certainly feels that the markets are feeling good as we move into, well, we're in barbecue season right now. I have some chicken marinating in mango and lime juice, incidentally, Art. I'd love to have you over someday for a barbecue. Let's have a look at the 10-year bond yield in the United States. That settling, we've seen it trading around 4.3% or lower. Not so long ago, it was at 5%, or close to 5 anyway. Sorry.
Yeah, that certainly has been one of the concerns in markets. Again, that sort of really flared up in the month of April and May, and we actually got to 4.68% in this last cycle, which was a lower high from the 4 3/4 that we saw 6 months ago. So it's heading in the right direction. I think that's very beneficial, right? And that also speaks to the uncertainty starting to clear up on some major issues, whether it's trade and tariffs. Certainly monetary policy seems to have a clearer view of things as to how they will react to the new budget and certainly to the trade and tariff policy. So I think bond investors are getting a larger sense of comfort around where we are economically, and certainly the economic data, while weakening a bit in the labor market, where we're creating on average about 135,000 jobs a month versus the 165,000 from the first quarter, that certainly hasn't fallen off a cliff. So we're normalizing some data. Retail sales are normalizing after a very powerful pull forward of demand for goods in the first quarter. So it feels as though we're inching towards a steady but slower economic growth, which is exactly what you'd like to see with all of the policy proposals that are being moved forward here.
So, Art, if somebody came to you and said, should I just pile into the stock market at this stage, what would you tell them? Say with their risky money, with a time horizon of 1 year, what would you tell them?
Right. Yeah. Well, I would tell you this. There's a lot of exciting things going on in the market right now around artificial intelligence that has nothing to do with, NVIDIA and Microsoft and Meta. And I think looking at some of the secondary and tertiary place where now moving from hardware to software, and the software applications that are really going to be beneficiaries of artificial intelligence look very exciting. So we're starting to see people navigating towards Oracle for the first time in this cycle, whereas that wasn't even mentioned as part of the Mag 7 for the last 2 years. Things around the fact that you're going to start to see the beneficiaries of artificial intelligence go from the hardware to the software, I think, would be one way to sort of attack this.
Yeah, it's fascinating. I tried ChatGPT for a calculation yesterday, and I think it was slightly off on one thing. However, the way it shows its methodology, it's just amazing.
It certainly is. It's like back when we were in school, Andrew. We got to show your work, right? And then you could figure out how you're getting to it. And the interesting thing about all of that is that's just the first sort of inning of artificial intelligence, right? So the agentic artificial intelligence, where you ask questions and they answer it, is really navigating towards things where it's actually going to generate the things that you should be asking, and getting to that higher level of actual artificial intelligence, where it's going to say, Andrew, that's a great question. Have you thought about it this way? So I think that we're making great strides, and I think this is going to be a very exciting year and decade for artificial intelligence and the artificial intelligence revolution.
You and I think we're old enough to remember when you had to do exams, you would come in and you'd have to actually physically handwrite. Maybe they'll have to do that with the students now. Just get them in. Yeah. You
got to get the blue book out and pencils down after an hour, right? So I think that's exactly, it's going to be very difficult to keep them off of their cell phones, their laptops, and their tablets, and getting those answers. It was interesting, Andrew, when you think about this, going back to when we were in school, we weren't able to Google something, right? We actually had to go to the library and use things like encyclopedias.